Hey everybody, it's Dan again. Hope you're doing well. I wanted to talk to you a little bit about credit cards, about what kind of features that they have, the use of credit cards, uh, just generally things like that. And I want to start off by saying that I'm no financial expert or guru or uh, know-it-all, or I don't consider myself to be a raging success or anything like that, or anybody's teacher. But I found some things that I thought were noteworthy and beneficial for myself and for my wife and for our family. And I hope that maybe if I'm dead one day, some of my kids can see these videos and have an idea of my personality and my descendants, I guess. But in the meantime, it's just me and you. I'm not dead yet. So, anyway, debt, we talked about debt before. It's a kind of bondage, and it can be a form of control. And the Lord doesn't want you to be in bondage or a slave to anyone. He gave us free will, and we should have both the exercise of that free will, but also when choices come, we should make the right selection when faced with those choices. But I'll read to you a little bit of Bible verses. This is John 8:36. It says, "He whom the Son sets free is free indeed." These are some notes. So if you look it up in your Bible, the words may be a little bit different. This is my own notes. But I in my private time lately, particularly the last 2 or 3 nights, I have found, I don't know when I thought of it first or when it came into my mind, but kind of a contrast came into my mind about there were instances where the apostles, the original guys that were with Jesus, they got put in jail. And of course, the Bible records that, and there's multiple places where you can find that. But it was just interesting to me, I suppose, that uh, people on earth thought that they were going to confine those guys or take away their freedom. But that was not going to happen because they were already free. They had been freed from sin, and they were continuing to be freed from sin. So to me, I thought it was kind of funny that that they were trying to trap some men and confine them that were free and truly free, particularly from their former life of sin. But in Jerusalem, they jailed Peter and John. You can read this in Acts 4 and 5. They gave them a hassle. They told them that, "Didn't we tell you already you ain't supposed to be preaching in this name? We told you that already. We're waiting on the Messiah." And that wasn't him. Okay. Jesus was not him, and we're still waiting on him. And that's our business model, is that we're waiting, and everybody needs to listen to us. And we told you not to preach in that name. And yet you continued going out there and doing that. So we're going to form up the full Sanhedrin and bring something like a court to expose these guys. That's what they thought. Well, a couple of things. First off, I found out that the Sanhedrin, I always thought that was some kind of Jewish you know legislative body or something, but I found out that it's not. uh, the Greeks had that even before the Romans. There was nothing, the Jews didn't come up with that. But with the Greeks, it was called the Synhedrion. This is a form of government, really, and the way that would work is that different villages and little towns, they'd have a group of kind of elder men that heads of families that would get together and vote and decide on certain things. But then they had what they called the Great Sanhedrin, which was all of them that were available. And a lot of things that the Greeks did were good, not all, of course, but the Romans adopted that, and other places did too, including the Hellenized Jews, and we can see that in the New Testament there with the Sanhedrin. So anyway, then in Philippi, Paul and Silas were jailed because they went by and there was this demon-possessed slave girl that kept hollering at them, saying, "Those are servants of the Most High God." And that was true. She was speaking the truth. But the Bible records that after a bunch of days of this stuff, Paul got irritated and he spun around and he cast the demon out of this girl. Well, the owners of this slave girl had been profiting from that, and they got mad. And so they went and had them arrested and all that. But in these cases, Paul and Silas were beaten with rods, and they were put in foot stocks. And Peter and John, they were in jail, but didn't work out like what they thought, because an angel came in the middle of the night and let them out. And the next day they came looking for them, and they found everything locked up, only the guys weren't in there. And then there came a commotion, and these guys were supposed to be guarding them. What happened? And where are they now? And then guess what? They found them in town preaching in that name again, just like they told them not to. But there was a guy, I think his name was Gamaliel, and he told them, before you guys do anything to them, because their words were really riling up the Sanhedrin and accusing them of being guilty of Jesus' blood by having pushed Pilate so to condemn a man that he knew was innocent. And because they were being accused of unjustly killing someone, this infuriated them, and they wanted to kill him or have him killed. Well, Gamaliel was an expert and a teacher in the law. And he spoke up and he said, "Hey, listen up, guys. Before y'all do anything crazy, now you want to do this to these guys? Well, that's cool, if that's what you want to do. But remember that before, there was another guy that riled up a bunch of folks, and he had a little army going and a militia, and they wanted to make a problem. Well, they killed that guy, and his followers all split to the four winds, and then there was another one. So he said, look, stuff like this has come about before. You guys calm down. If this is just some man-made stuff and some rabble rousers, I guess you could say, then it's just going to come to nothing anyway, and there ain't no point in it. But if this is from God, then you'll be finding yourself fighting against God, and that ain't going to work. So anyway, also Jesus quoted. He quoted in Luke 4:18. He quoted from Isaiah 61:1, where it says that the Spirit of the Lord is upon me to speak good news and to set the captives free and other such things. You can read that, Isaiah 61:1. And by him proclaiming that in the temple, this was a fulfillment of the prophecy. And anyway, and where the Spirit of the Lord is, there is freedom. But anyway, so you don't want to be in bondage. You don't want to be a slave to anybody and, be burdened with debt. And credit cards are a form of debt. Okay. And you have a debt when you have borrowed money. And credit cards are borrowed money. Okay. So if you need something and you don't have the money, you can borrow from a credit card. And it's not only just a form of a type of purchase. There's also certain protections that are involved. Uh, like if you're going to rent a car, or if you want to charge back on something, like you made a purchase and then you didn't like it, and fix this thing a little bit. Uh, there are certain advantages to using a payment system that's over the Visa network or the MasterCard network. Okay. But what I did is I printed, look at this. Let me show you this. Now I got 1, 2, 3, 4, 5, 6, 7 different credit card companies. I want to show you a little bit about it, okay? Now I'm not endorsing these, nor do I claim to have a card like this or thinking that you should or anything like that. This is just, for your own education and mine as well. But I got Bank of America, and I have American Express, okay, and I have Chase, okay. I got U.S. Bank, I got Discover, and I got Sam's. That they have their credit card. It's Sam's branded, but it's from Synchrony Bank. But anyway, I want to show you some things that they have in common. Okay. Uh, they passed a law years ago called the Fair Lending Act, and there was a whole lot of provisions. And prior to that act being passed, a lot of the writing that were in cardholder contracts and different agreements that these lenders would send out to the public, it would be written by a bunch of attorneys, which it still is, but they would deliberately try to obscure the language and make it hard to understand for the common person. And I feel sure that this is undoubtedly to make more money. They're in business to make money, and they want to make as much as they can. But when the Fair Lending Act came out, it required lenders to disclose all that stuff, typically on a single sheet of paper. Okay. And a lot of times you see it in a chart form like this. So I'm going to kind of go over it. Okay. Look at here. You got the annual percentage rate. Okay. And the annual percentage rate it'll vary with the market based on the prime rate. And then over here, you can see they got the little rates for the annual stuff over there. Okay. Well, the way that works is the Federal Reserve sets the Fed funds rate. Okay. And usually the Fed funds rate, like right now, it's like maybe 5%, something like that. I think it's 4.25 to 4.5, maybe something like that. But anyway, the Fed funds rate will be there, set by the Federal Reserve. Then about 1% above that will be the prime rate, and that's the rate that banks get when they lend to each other in their clique that they got, or their cartel, or whatever you want to call it. But me and you don't get that rate, okay, that prime rate. And then coming off of that will be the APR that me and you get. With some lenders, that's going to be based on your credit score, okay? But with these credit card companies, look at this. It has it right here where you can read it, okay? Prime plus 6.74% to prime plus 20.74%. Now, this particular thing is, from a couple years ago, so these rates are not the same as they are now, okay? But in this case, in this example, that makes for an APR that's 14.24% to 28.24%. Well, then you have an APR for balance transfers. And these APRs will vary based on the market, based on the prime rate. And this would be like if you had a debt and you sold it to another credit card company. There are charges associated with that. Sometimes the original debt holder, as a security, which would be like, in this case, Bank of America, they will pay that. Sometimes the other company, the receiving company, will pay for that. But ultimately, it'll be passed on to you. How's it going, y'all?
Sorry.
All right, all right. Uh, check cash advances. Okay, it's got a place on here for check cash advances, and this is all coming off. You can see it right here. It's coming off the Fed funds plus the prime, plus they're deriving the APR for that. Okay. Well, cash advances. Look at there, APR, 28%. So it's on the highest part of the APR on this one for a cash advance. So what does that mean? If you have a credit card, don't get a cash advance. In fact, some of them, it says that if you make a purchase at a retailer like Walmart, for example, and then you get a cash advance on that same transaction, the whole transaction will be treated as a cash advance. Okay, now why is that important? Well, in pretty much all of these cards, if you get a cash advance with the credit card, instead of waiting for the billing cycle to go by and then the interest hits your account, interest begins to accrue from the very day that you made the cash advance. There's no delay at all. Like that night, the interest hits. And it's going to accrue all, even though the billing cycle is not complete. And this is in the contract, and you agree to it. Okay. And this particular one, this is Bank of America, and they may not have these provisions now, I'm not sure. But Bank of America has a penalty APR, and when it applies. Now, see how this is a chart? They have to disclose this because of that law. Believe me, if they didn't have to disclose it, they don't really want you to know. They'll have it buried somewhere. Okay. But penalty APR, when it applies, there's no penalty, none, or up to 29.99%. Holy mackerel, right? Okay, based on your credit worthiness, this APR will vary with the market based on the prime rate. This APR may be applied to new transactions on your account if you make a late payment once. How long will the penalty APR apply? If your penalty APR, if it's increased, your APR is increased for this reason, the penalty APR will apply indefinitely. So you get this card and you go into Walmart and you buy a pack of bubble gum and stop this thing. You buy a pack of bubble gum and you don't pay the bill, you automatically go potentially on this particular contract from 14% to 30% just because you missed the payment date. Okay, they've got that. Now, these others in here don't have a penalty APR, but you better read this stuff before you go to sign it. It's not free money. It's not magic plastic stuff that you never have to pay. No, this is what broke people and people on the way to bankruptcy. That's the way they think. You need to look at what you sign here. You need to look at it. You need to read it. And if you don't understand these terminology examples that I'm giving you here, study up a little bit. Try to get an understanding of what these terms are. Okay, your due date is at least 25 days after the close of each billing cycle. 25 days after the close of the billing cycle. Okay. We will begin charging interest on cash advances and balance transfers on the transaction date. So they ain't no waiting. They're going to hit that with interest from that day. Account fees, annual. Okay. Now these people got an annual fee of $0 to $550. That's going to be based on how sketchy you look to them. Transaction fees, balance transfer 0 to 4%. These are all fees. Now, this is not interest. This is just fees. Okay. 0 to 4% of the transaction. Okay. If it's a big transaction, that's a lot. It's based on volume of the purchase. It could translate into a lot of dollar amounts. ATM cash advance, percent of transaction, 5%. So there's a fee. If you get $100 at the Walmart cash register, they're going to take $5 out just as a fee, and they're going to start hitting interest every day from that day. Direct deposit, they have different stuff like that. Okay. Anyway, I'll move on. Okay. Late payment, it's a penalty fee. Man, they keep coming with the fees. Late payment up to $40. And don't forget, if you are late, you're going to get the $40 plus you're going to be at the penalty APR with these people for 29.99%. Not good. Not good. Okay. They reserve the right to change this agreement at any time. They can add and delete and take stuff away whenever they want. Okay. And the reasons that they may change this agreement is if a law changes, your credit changes. Okay. If the market changes, different stuff like that. Okay. Which is understandable. They run a risk-based business model. And if you're looking sketchy to them, then obviously they would need to get more for the risk. Okay. Types of transactions. Now look, when you go to buy something at a retailer, look at your receipt next time. Now this is not true on all debit charges, and if it's a cash transaction, a lot of times it's not there. But on a credit card transaction, there's a bunch of codes. There's transaction codes and batch codes and different things like that. That's because they're putting all these charges together, and later on at night they'll send that batch of payments over the network to be paid. Okay, there's a lot of that stuff. Well, buried in that code is the kind of thing that it was, you know, the code that represents that type of commodity or whatever it is that you bought. And also on the receipt is a document. It's actually evidence if it needs to be, but it's got the date and the time and what you bought. It's an itemized bill that you already paid, essentially. Now, if it's credit, then you didn't pay it yet. You borrowed from, Bank of America. Uh, Cash advances. Okay, as you go along paying this stuff, they're building a financial profile of you. Okay, so if you look like you're something's wrong with you and you ain't paying on time, you're not reliable to them, then you're a higher risk to them than you were before. So they're liable to lower your credit limit of credit that you have available, or increase the interest rate that they charge you on all this stuff. Okay. And you can be mad and say that it's not fair, but it is. I mean, it's unsecured debt, which means that, like a car or a house, they can come repossess it. If it's just straight out money that's just swiping on a card or sticking the chip in there, it's not secured by anything. They can't come and, you know, repossess the giant box of moon pies that you bought. So their risk for lending is higher. They can't repossess that stuff and resell it to try to recoup their losses. It's just gone. And since it's like that, it's right and fair and just for them to charge a higher amount than it would be if it was a secured loan, like for a car or a house or other types of loans. But now, if 30% is excessive or something like that, that's another argument, really. But it makes sense for it to be higher than it would be for a secured loan, and that's a fact. But yeah, they're building your financial profile about you. Okay. When you make an online purchase, it's a form of contract. Okay, you're agreeing. And in here, I'll probably get to it in a minute, but there's a part in here that's your promise to pay. And this is not some kind of comical word that they put in there. It's a legal thing, promise to pay. There's also duty to inform. There's other things. These are legal requirements. Okay. If you buy stuff in a foreign land, okay, let's say you go to Europe or Mexico or something, they've got some fees in here for that when they change it over to US dollars. In my case, since, you know, I live in the States. Okay. Now here, they have to show you all the ways that they're going to charge the interest and fees. Okay. And it's all right here. Uh, Penalty APR and when it applies. It says it again. Each time a total minimum payment due is not received by its applicable payment due date. So you're late. You owe $1 million and you're supposed to pay $20 and you didn't. Here comes the penalty rate. And according to these people, it's indefinite. It's forever. And then it tells you you can nerd out and do your own calculations if you want to, but you don't need to. Believe me, they're checking your stuff. And then here there's balances that are subject to interest rate. Okay, so when they have when you make a purchase, okay, and let's say it's for $100, okay, when it comes into kind of their bucket, they got to separate that into different stuff, okay, and down to very small amounts of money, even fractions of a cent, okay. And this is it subject to interest or not? Okay, and some of that is like if you get 12 months, no interest and stuff like that. Okay, is it subject to interest calculations or not? Is it a balance transfer? Is it a cash advance? Is it a regular purchase? You know, what is it? Okay, now if you get out to the end of the like 12 months, no interest, or 18 months, same as cash and all that, well, you know, they're going to hit you with, you know, they're going to smack you in the face with that interest. So discipline is the key. Discipline is the key. You got to make those payments. Anyway, I'm going to try to hurry up. Video's getting a little long. But then they tell you how they get to the minimum payment. Okay. How we allocate the payment. Default. Now, technically, in this agreement, if you don't uh, make the minimum payment on or before its due date, you're in default. And therefore, that entitles them as a right to apply the penalty APR. And believe me, they're going to exercise that right. Now, there are certain times, loan modification, that they will allow you not to pay a payment. Now, you can work that out with them, and it's unusual, but there are circumstances where that happens. Recurring pre-authorized transactions. If you got subscriptions and things that get charged every year to your card, you know, be aware of that, especially if it's monthly. You know, because it may hit at a time when you didn't expect, and you'll be paying interest unnecessarily. Because down at night when they receive payments, a lot of these cards that are going to process charges before your payments. So your payment might not be enough to cover the total interest that's accrued because the amount is more than you expected. And it wasn't reflected on the bill because that recurring transaction for that subscription or whatever happened after you received the bill in the mail or after you looked at it or whatever. So you're unaware and you're going to get hit with that interest. They may sell your account. Okay. So businesses get credit from other lenders and other businesses. A lot of times you can do that on accounts receivable. If you have you know, customers that pay regularly or other businesses that owe you for services or products that you supplied them, those are accounts receivable, and you can reasonably expect to receive that money. So a business can take the amount of those accounts, or a certain amount or a percentage, and go to a lender and say, hey, we'll use that as collateral for a loan. And a loan is not a taxable event. If you borrow $100,000, that's not a taxable event. You don't owe money on that. So yeah, they may sell your account. Okay. Oh man. Well, that is basically, this is Bank of America. Okay. Now I'm gonna run through these others kind of fast. Okay. But basically, I want to show you the boilerplate. Okay. I don't know if you can see that. I don't know. I'm trying to. But anyway, look, same stuff. APR, the interest rates is going to apply. This is at a different time, so don't worry about the numbers. But yeah, it's going to be the same thing. It's going to be the Fed funds rate plus prime, and then plus this, which in these people's case is 6.74 to 20. It must have been a long time ago. U.S. Bank, I don't know, whoever that is. Okay, balance transfers. Look, here's the stuff for them. Okay, the APR. Let's see, for cash advances. Okay, interest for that, different amounts. Okay, when it comes in their bucket, they're dividing it just like Bank of America. Okay, look, there's no annual fee with these people, and there's no travel fee, whatever that is. Okay, transaction fees. Now they got a bunch of fees. These people got a bunch of fees. $5, $3, 3%, 4%, $10. You know, so they're getting you with fees. Now in the banking world, those fees and things like that, overdraft charges and things like that, they call that non-interest revenue. And the better banks consider it predatory, and they don't do it. But that's U.S. Bank. Okay, look at this. This is Chase. Okay, look, APR. There's a percentage. See how it's like on a boilerplate? It's like a chart or something. Okay, the APR. There's how they calculate it. It's going to be Fed funds plus prime plus whatever, rate that they want to get. And you don't have to accept this. Nobody's sticking a gun to your head. That's up to you. But cash advances, guess what? Yep, they're charging you on that. Penalty APR. These people have a penalty APR. It's up to 29.99%. That was probably, if I had to guess, that was probably a legal limit at some point for those two to be similar. There's no membership fee with these people. Okay. Transaction fees. Here's $5, 5%. So this is Chase. Okay. This is American Express. Okay. APR. The percentage, the rates that they're using. Okay. Balance transfer and the rates that they're using for that. Penalty APR. Ooh, these people have a penalty APR too. It says prime rate plus 25.99%. So they're not doing that based on your credit right here. They're just like, they don't care who you are. They're going to hit you with 26% plus prime, whatever that happens to be at the time. How long will this penalty APR apply? Let's see here. It will apply for at least 12 billing periods in a row that you're making payments on time for 12 billing periods. Okay. So it's not indefinite with American Express, but you got to show good behavior before they let you out of jail or whatever. Okay. Transaction fee, balance transfer. These are a bunch of fees here. They got all that. Okay. Discover. Now, Discover It's a little bit different here, their format. Okay. But I don't know. I don't know why. Oh, here it is. Okay. It's back here. Yep. See, it's a chart. The APR, the rate. Okay. Balance transfers, the rate. The cash advances and the rate. The penalty APR. Discover doesn't have one, or at least at the time of this. No penalty APR. That's cool. Paying interest. It's going to be 25 days after the close of each billing period. Most of these in here that I showed you, they're like 21 days, 25 days after the billing period, stuff like that, which has got to do with their internal business cycle. Okay. But you need to know when those dates hit. Okay. Annual fee, there's no annual fee with Discover. Balance transfer, 5% of the amount of each transfer. Cash advance, this is all here. Okay. Sam's, okay. APR. I don't need to bore you. It's the same stuff. Okay. Well, what would be the best thing to do if you need to make a purchase? Well, a lot of purchases, you know, typically a credit card is used. You know, renting a hotel room, renting a car, you know, things like that. And also, if you're traveling or at a merchant, uh, anywhere really, but especially abroad, if you go outside the United States, uh, it will be safer to use a credit card because the charges can be disputed and charged back much easier. Now, with a debit card, usually once it's gone, it's gone. Now, you can call up, you know, all the law firms and call the president and all that stuff, but it's going to be hard to claw back that money. With a credit card, a lot of times it's just a matter of a phone call. Now, they're not stupid now. If you keep making phone calls and, you know, they're not gonna, you know, they keep notes of all of that. A lot of times they record the calls, and you don't want to be lying to them, and you know, or go down the road of credit card fraud or credit fraud, and it's crossing over state lines, for example. Okay, these, you know, these are felonious things that you don't want to be a part of. Okay, but a credit card affords you a certain amount of protection. So, you know, it's like a loaded gun or something. So how can you use it and not get the penalty APRs and all that stuff? Well, uh, you don't want to use too much of your available credit. Okay. General rule of thumb: if you get a card and let's say it has $1,000 limit, I'm just making up numbers here. It's got $1,000 limit, and you go and you get a pack of bubble gum, and then you know you get a bottle of Yoo-Hoo, and then later you're buying furniture, and you know later on you buy a used car. I'm being kind of ridiculous, but the prices go up and up and up, or the balance rather. Uh, Eventually you'll get over 30% of your available credit, and it will start to damage your credit score. People with good credit typically use 10% or less of their available credit, and they pay it off every month. So in this example, it would be they would spend $100 a month, and they would pay it off every month before the due date. Uh, so basically, you want to use it on certain purchases. It'll build a credit history and a profile of your spending that they share this with other lenders and stuff like that. And if you go to borrow some money, they're going to look at it. So you need to build a payment history, and that's good. But if you do, uh, stay well below 30% of the available credit, and preferably 10% as a maximum. Anyway, I hope this does you well. Be wise, do smart stuff, and be careful with the credit cards. You know.